Howdy, howdy, thank you for clicking in. You have Digital Asset Hutch here, bringing you everything you need to know about the crypto space and the U.S. economic side of that, and why the U.S. economics does impact the crypto space. So, with this being my first video, can you go ahead and drop a like and subscribe to that new YouTube channel so we can go ahead and kick off 2023 in a bullish fashion. Now, I do want to go ahead and just preface by any means this isn't financial advice. This is just my own research, and I just want to bring my own research to y'all, and I want to start conversations with people to see what they believe the market's going, where it's at, because I just love talking with people and kind of getting their opinions on the market and where it's at. So I hope y'all can go ahead and take this information and then go ahead and then drop some comments below on what you thought of it and if you agree or disagree, and we can get that conversation rolling. But yeah, the goal for today's video is just to kind of tell you why I think the bottom is in for Bitcoin and kind of where I want to take this YouTube channel. So kind of the goals for this YouTube channel is I want to go ahead and drop one video on the weekend on a Saturday or Sunday, kind of the overview of what happened the week before and where we could possibly be going in the future, and then just bring you some of the news that happened from the previous week. And then I want to go ahead and within that week, following that video, drop about 3 YouTube shorts for y'all that will range from about a minute to 2 minutes to kind of have an in-depth um, kind of analysis on that one section of a video. So we might have about 5 or 6 topics in that video on the weekend, and then we'll take one of those topics and kind of break it down in a YouTube short for y'all in the week following. Now it might take me some time to get this routine going fully, so please be patient with me, but just go ahead and hit that subscribe button so you can stay tuned with me and you can follow me on this journey. Now let me go ahead and get to the main topic of this video, which is why I think the bottom is in for Bitcoin, and that's the reason you went ahead and clicked in. So let me go ahead and get started for you. Now, the first thing you always do when you are going to go ahead and look at the Bitcoin and talk about Bitcoin and kind of analyze Bitcoin is you always got to start at CoinMarketCap. It has very useful data in terms of Bitcoin dominance, the market cap, and then just the prices for Bitcoin. So I kind of just always start at looking at this top bar here and looking at Bitcoin dominance and then the volume and then the market cap. As you can see here, Bitcoin's market cap is creeping up on that one, or not the crypto market cap, not Bitcoin. The crypto market cap is creeping up on that 1 trillion again. And I think that 1 trillion mark is kind of a psychological resistance for us right now. So that is something to look out for going forward, and I think that's kind of like what's possibly preventing us of flipping that and using it as support. And I think once we do that, we'll see Bitcoin kind of using 21.5 as support. Now, by no means is that financial advice. It's just kind of my own opinions. But yeah, that's kind of how I use that market cap. It's just kind of to see where we're trending and what psychological points would we be stopping at. What you would use Bitcoin dominance for is kind of an indicator of where we're going. So when you see Bitcoin dominance starting to fall, you can kind of tell that we're coming towards the end of a bull market. People are taking their gains out of their Bitcoin and they're putting them into these alts for an alt season pump. So as you can see, it's kind of been the opposite that's starting to play out for us. If you want me to go ahead and click into this graph for the last month, as you can see, Bitcoin's market cap, Bitcoin's dominance is starting to increase. I don't know if that's just with the dominance and the market cap going up, but you can see it was at about 37% in November, at beginning of December, and it came in at almost 42%, 41.5. So yeah, these aren't eye popping changes, as you can see just looking at the overall, but I mean you can see it's starting to trend up just with this little dip, which I think is a bullish indicator. So that's just kind of what you do for the coin market cap. You can see the just overall prices, what's happened in the last 7 days for certain coins. I'm going to try to stay away from altcoins at the beginning of this channel, but yeah. So that's kind of what you'd use CoinMarketCap for. So then I'm going to just go ahead and jump over to one of the main reasons I do think the bottom is in, and that is just the CBBI. So this is a very helpful website I've come to find out because we all looking at different top and bottom indicators, but why would I want to sit there and analyze each and single one of them when this website combines 9 of them for you and compiles it into one score from 1 to 100? Easy as that, right? So I'm not saying this is kind of just the go-to website to use if you're wanting to set buy and sells. Whenever it's above 70, you sell, and whenever it's below 10, you start buying. But it looks like that's kind of played out pretty well for anyone that has. Now, by no means is that the logic to go by, because everyone has their own suitability, they have their own investment time horizon, they have their own risk. So those are all something to keep in mind when you are investing for yourself. But I mean, just kind of looking at the history of it, if you kind of just played it out by buying below 20 and selling when it's above 80, doesn't look like it's been too bad for you. Got to be honest. So this is just kind of one indicator I keep in mind. It compiles top and bottoms from Newpool charts, which is net unrealized profit, people who buy Bitcoin, and then how much of those people are in profit. So it looks like 31% of them are in profit from the people who've bought it and are holding it, which is pretty good. It's a very I do like Newpool as a very heavy sided indicator for me on top and bottom. Also, some of them, the trend lines you have also, total cap. You have the pi cycle top, which is, I know a lot of people love the pi cycle top of whenever it gets up to a certain point, they will start, selling. So these are all compiled and are analyzed into giving you one score. And one of the main ones I love to look at is moving averages. And we're just gonna go ahead and have it their own section for moving averages, because I think the two key ones to look at would be that 50-day and 200, because what can come out of those is a golden cross and a death cross. Now, when you hear these terms, you're probably like, what does this mean? Well, let me go ahead and explain it to you. Whenever you have a 50-day moving average, a lower time frame moving average, and it officially crosses above that 200-day or a higher time frame moving average, that is what we call a golden cross. Golden, bull. Think, oh, golden, that's good. So what happens typically after these is you see a run up to the upside. It's not guaranteed, that is for sure, so nothing is ever guaranteed in this space. That is something I want to definitely let you know now. Don't ever think you're going to invest in anything and get a guaranteed return. The only time that will ever happen to you is a match in your 401k. That is the only guaranteed investment you will ever have, so I want to make sure you utilize that. Also, another thing you have is the 50 crossing below a 200-day moving average. Whenever you have that 50-day moving below the 200-day moving average, that is what you call a death cross. Obviously, death isn't good, and this is what we would call a bearish indicator. So how can we kind of use these to our advantage? Well, let me go ahead and before I go into that timeline of Bitcoin, which is another reason, let's kind of look at the Dow and see every time that they've had a golden cross. We're just going to kind of ignore this one. Sorry. This wasn't an official cross. It kind of touched, but we saw a nice 40% rally, so I'm going to throw it in there. We did have a golden cross here, and it actually didn't play out. It was a fake out to the downside of 11%. So I want to go ahead and keep that in mind for y'all as well, that not every single one is going to play out. But then if you look, not even probably what? I would say 3 quarters later, we had another one, and it pumped 49%. Then we had a nice little rejection of that death cross, and then I kid you not, 2 quarters later, we had another one for a 14% pump. We had a death cross, and it went down. Then we had another golden cross, and from that golden cross, we pumped 39%. And the reason why I wanted to go over these crosses is because on the Dow Jones Industrial Average, you actually see a golden cross play out at the 1st of December, over a month ago. I think we've had enough time to go ahead and confirm that this has played out. And confirm. So I just wanted to bring this attention to you, is that you can see the stock market is possibly trending bullish. I don't want to officially say that because there is no guarantees, but as you can see, it is kind of starting to play out Ever since we got that, we've had a nice little pump for the Dow to the upside of 4%. Well, which is pretty good for the stock world. It's not crypto that jumps, 7% in a day. So that's why I kind of wanted to pull out that, because also if you go and look at the Dixie, which is pretty much how strong our U.S. dollar is. It's the dollar currency index. It actually had a death cross, and whenever the Dixie has had a death cross in our past, um, pretty much the markets have reacted in a positive way to that in terms of Bitcoin. So we have a positive indicator on the Dow for a golden cross, and then a negative indicator on the Dixie, which is also an inverse indicator that shows positivity. So as you can see, it's just constantly showing that there could be positives. And then, like, as you look into some alts, which by no means do I think alts are indicators of what's going to happen, but you have a golden cross right here, and then you pumped. After this cross, you pumped 100%. So, like I said, you can't ever look at one coin or one indicator and say, hey, it's going to happen. But these are all just some things to look at. Another kind of reason why I do think that bottom is in for Bitcoin is just look at the timeline of the tokenomics of it. We have the halving every 4 years, right? Which is these purple lines. As you can see, after each halving is when we have that pump. But typically, about a year and 3/4 before the halving is when we find that bottom. About that time frame right now, you can see it was the bottom of Bitcoin. So, I mean, obviously, black swan events and Genesis possibly bankrupting could, take us a good chunk down. But just from the pure time point of Bitcoin, it looks like the bottom should have already been in, which is another reason why I think it is. Now, this isn't because, that the pump we've had this last 10 days confirmed it for me, because I've always been leaning that the bottom was in. I was about 50 to 70% that the bottom was in 2 to 3 weeks ago. It's just, I want to now present this to y'all, because I know with this new pump, a lot of more people could be entering in the space, and I want to give them all of the information, because now we're about to go over some, not so good indicators that could show us another leg down in the upcoming quarters. And I kind of just want to start with the federal funds rate. Why are we looking at this? You might ask, well, Casey, or why are we bringing up, loans for banks? Well, it's important because the federal funds rate it's not only for loan or a loan from bank to bank. This also, trickles down to you. So if a bank loans another bank money and it's charging them 4.33% interest, you think that bank's then going to loan you that same money for 4.3%? No chance. That's not happening. I can guarantee you that right now. They're going to go ahead and turn that and start, loaning the money to you for, as you can probably have seen, just shopping the market yourself, 8%, 9%, 10%. So if it costs people 10% to go loan this money out of a bank, do you think they're going to then want to go ahead and spend that money in the market? No. They're struggling just in their own finance. They're not going to borrow money at 10% and then go ahead and invest it. Now, this is also another thing. If you can go ahead and go buy a bond and then or essentially loan people money and get a high return on that, why would you go ahead and risk your money in an asset that could go up and down in price when you're going to keep your principal in a loan and get 5, 6, 7% off of it? So these are all some things to keep in mind as you are going over what's happening in the world. And as you can see, as we typically pump these rates, they stay there for a little bit. We don't instantly start bringing it down, nor do we just have a good hike and then not kind of slow it down. So we've had we ramped up the hikes going from 0.2, 0.5, 0.75, 0.75. We just had a 0.5, but all of the data is showing that the next one has a, you know, in February, we have a 93% chance of getting another 0.25% hike. So these are all something to keep in mind. And then, if you keep going in the future, March, they have a nice 78% chance of another hike. So I don't want to sit here and tell you that it's all, sunshine going forward. Because also with a pump of, let's see what we had. Also with a pump of, you know, let's get off of these trash altcoins. 20%, 30, 23% in the last 7 days. You're gonna have a correction. So that correction's coming. It's just a matter of when and a matter of how. And then the last thing I kind of want to go before signing off here, because we are about 16 minutes now, is the CPI data, which I think is what initiated this first pump. And I'm a little skeptical on the CPI data being positive. If you look, CPI is really only going down in one area, and that would be the fuel industry, which is good for us in terms of putting gas in our cars, but it's kind of bad if you look at it as a full picture. So you can look at all items and say, hey, yeah, we did go down, good for us. But what do we eat every day? Food. Well, food's still going up 0.3% or 0.3. And then food at home is going up 0.2. Oh, you're lazy and don't want to go and cook dinner tonight and you're going to go at a Chick-fil-A? Well, that's up 0.4. These are all something to look at is, yeah, we did have a nice CPI drop this last December. And it was just solely for fuel. Now, why could this also be a good thing is because fuel is a leading indicator. What do you need to make food? You need fuel. What do you need to ship food? Fuel. What do you need to make houses? Fuel. So, with fuel going down, this could be a good indicator for, the future to come in 6 months, but don't expect that to happen overnight by any means. So, this is all the kind of, just the overall view of why I think kind of the bottom is, but with some reasons why it could just kind of be smoke and mirrors and a nice little bear market rally. So with all of that data, that's just kind of be the conclusion of my first YouTube video. Kind of want to hear your thoughts. Maybe you agree with me that the bottom is in. Maybe you disagree. Maybe you think I analyzed some of this data wrong. I would love to hear all of those opinions in the comments below, but also don't forget to like and subscribe, and I hope to see you back for those shorts in the future weeks. Thank you, and hope you'll have a great rest of your year and a good start of your 2023.